Market regime is an extremely important concept in trading. Basically, you want to segment the market in separate regimes. For example, if you're trading bonds, then obviously interest rate should be the market regime because it affects that market a lot. But as algo traders, we are not specifically specialized in a single market, although you can be. But since we are dealing with numbers, it makes sense then to use some algorithm to define the market regime for any market. As I mentioned many times on this channel, in my algo trading masterclass and in my community that I run, the best market regime usually consists of direction and volatility. Although you can use other options like I mentioned, but usually direction and volatility have the biggest effect on any market without getting into the specifics of that market. An example of volatility market regime is the average true range. The average true range measures the range of every bar on daily basis. And when that expands, that correlates with high volatility. An example of direction is simply a moving average. If the moving average is up, that usually correlates with a bull market direction. And of course, if it's down, that correlates with a bear market. Of course, as always, as algo traders, we need to test to verify. So let me show you some research that I've done. Here I have the RSI2 strategy. This is the basic strategy. We are buying when it's below 20. We are selling when it is above 80. I'm using the S&P 500 futures, and this is the RSI2. So 20 and 80, buying below and selling above. Selling, not selling short, I'm just selling the position. This strategy is long only because I'm using it on the S&P 500, an instrument that usually drifts up all the time. And let's see the performance since 2006, making 177, 3-to-1 drawdown ratio, and 681 average trade, 75% win rate. So the graph, obviously, it's really good, except this hiccup. 2008 is down, 2018 is down, and since 2018 we have been on a huge run. And by the way, this basic strategy, I started featuring it about 2 years ago. So if you traded it on one contract, 22, 23, that's almost $50,000 in profit. This year, look at this, 91% profitable rate for the last 11 trades. On average, we're making $3,200. That is huge, unbelievable. It's an outlier, but you know, if you trade long enough, then you will face this and of course the opposite. Anyways, enough rambling. Let's test some filters. So I have here the ADX and the average true range and the 200-day moving average. First thing I will use is the 200-day moving average. So now we are only trading, taking the signal when we are above the 200-day moving average. And let's see the curve. So again, we still have this hiccup in 2020. And now we are making $98,000. Less trades. It's still a good average trade and a good win rate. These are good, but we're making a much less amount of money. Also, the return to drawdown now dropped to 2-to-1. So now we will only take the signal, the RSI signal, when the ADX 20 is below 20. And now we enhance the win rate. We also enhance the average trade. And let's look at the performance here. And definitely we enhance the return to drawdown ratio. We used to be 3-to-1. Now we are 5-to-1. So we enhance at least 3 metrics. So I really like this filter. Finally, let me use the ATR, which is the approximation of the volatility. And now this is what we are doing. We're only taking the RSI signal when the ATR is dropping. And this is the best filter so far because the win rate jumped to 79. The average trade jumped to 927. And the return to drawdown ratio 6-to-1. We're making 143,000. That is the best filter. And look at the annual period. It's the same pattern. We're losing 2007, 2018, and since then we are been on a huge run. And by using this filter, the 90% win rate of 2023 becomes a 100% win rate, which matches another 100% in 2021. And if we look at our curve, we mitigated the crisis in 2020 without targeting that crisis. Remember, this filter is on all period, so we are not targeting only the 2020. I cannot say anything about this filter except it is amazing, on an amazing strategy already. So combining these two, really you get one of the best bulletproof strategies that I have developed for the past 7 years. I mean, I keep developing strategies, and this one always comes on top in terms of robustness. Of course, I have strategies that makes more money, but the robustness of this strategy and the variations that you can add to it, it never ceases to amaze me. Now, if you're an experienced algo trader, you might have noticed that there is a catch with all these filters, because I picked a fixed value while all these filters are extremely optimizable. Let's pick the moving average. I picked 200. You can easily go from 50 to 300. If you pick the ADX, I picked 20 bars and the level 20. You can optimize the level. You can optimize the look back of ADX. And if you pick ATR, the average true range, again, I picked 20 bars and the slope. So again, you can pick a level or a slope and the look back period. So the problem with all these indicators is the optimization. You cannot fix it. I mean, you can, let's say you say, okay, from now on, all my moving averages filters are 200. You can do that, but it's really hard not to optimize that number. So to solve that, you need to pick indicators that are unoptimizable. And that is what I did. So I created a proprietary indicators. I call them Stat Oasis Market Regime. They consist of direction and volatility. These indicators are included in my Algo Trading Masterclass for free, and they come on SQX, Multichart, TradeStation, and MetaTrader 4. Now, the way these indicators works, just like I told you, you cannot optimize them. They have a state. It's either black or white. You cannot do anything else. So if you say, I want to trade in a black state, then you will trade in a black state, and so on and so forth. And of course, the best way to illustrate this is with an example. Now here I have version 2 of market regime indicators. Version 2 is under development right now, and they will be included in Algo Trading Masterclass version 2, which will be released soon. So what I did in version 2 of these indicators is I make them even less optimizable. In version 2, there is only 3 states, which is either bull, sideways, or bear. Also, I made 2 of them. So one of them is fast, which will help fast traders. So if you're trading on intraday or extremely short term, then the short term market direction will make sense. And if you're trading a little bit long term, saying daily or weekly, then market direction long term makes sense. And this is the 2 market directions. And finally, I have the volatility indicator, which is only 3 states: quiet, normal, and volatile. Now, although I'm using these indicators as filters, but they can be used many other ways. For example, you can use them in divergences. And here is an example of a divergence. So you can see this one, the low was here, and this low, while we're going up, the price is down. So we expect the price to move up. Also, we can pick, for example, this is the long-term trend, which is a bear. And so we can expect to take the next bear trend, this one or this one, and we go with the direction of the big one. So here, for example, we can short here all the way down, and we can short here all the way down. Of course, it works on the opposite side. So there are many ways to use these indicators, but in this video, we'll only use it as a filter. And the point being is we cannot optimize it. It's just a state. So let me bring the optimization. And here I have the 4 filters. First filter is day of the week. This is an important filter, and you can use it in any strategy. Basically, you're filtering by the day you are trading. 0 always means that the filter is passing through. We are not using it. So that's day of the week. And then we have 3 states for direction, short term, 3 states for direction, long term, 3 states for volatility. In total, we have 384 combinations, and let's run it. So the top result is 177. This is without using anything. This is our original RSI strategy, which is making 177. drawdown minus 58, the average is 681, return to drawdown ratio of 3, 75% win rate, 1.9 profit factor. So if I sort by custom fitness, which is the return to drawdown, we can see immediately that I have a huge difference. This is 8.17. Profitability win rate is up to 80%. Profit factor is up to 3.27. Average trade is up to 977, and we are making 143,000. Now I'll skip these two because they are making lower trades. Let's take the next one. This is again 81% win rate, 359 profit factor, $957 average trade, and 659 return to drawdown ratio. Huge improvement. So this one, it's only using volatility. That means one is quiet. That means when the S&P 500 is quiet, it's not volatile. Quiet means it's below normal. We usually tends to do very well with the RSI strategy. The next best one is again low volatility, but this time we are using direction. So short-term direction 3, that's bull. That means this one is green. So when we are in a low volatility market plus we are in a short-term bull market, then we tend to do very well. So remember, this strategy is a subset of this strategy because we are using the volatility filter and then we're layering the second filter. Why this filter is different? Again, because I cannot do anything. I'm only optimizing this 3 states. I cannot optimize the look back, the level. There's nothing there. It's only the states that I'm optimizing. And in fact, I'm not optimizing. I'm looking at which state my strategy performed best in. Let's look at this first one. You can see there is a drawdown, a little bit of drawdown in 2020, but not as big as we saw in the original one. This is another profile. It's less trades, but again, we can see that we are barely making a drawdown. You can see that there are not enough trades with these straight lines. That means we're not trading at this time. But this strategy can be easily added to another strategy in a portfolio. To learn more, watch this video and I will see you there.